Okay, we're live. Hello, everyone. Welcome to Polkadot broadcast. And it's Kristen here. Um, for this episode, we will focus on the inflation halving because Polkadot uh, is introducing the biggest reset of Polkadot economic model, and which is strongly pushed by the community. And according to the latest updates, the reset will happen on roughly on March 14, 3:20 UTC, which is 24 hours after, roughly 24 hours after. It's happening soon. Uh, because it reflects a clear desire that the community really want to see the real change that it will bring to the ecosystem. So I think it worth us to, to dive to break it all with our audience to correct the expectation from the community. For all the halving stuff. So today I've invited Michael from Mandala Chain and uh, Bahel from Aventors to join us today. Welcome you two guys.
Hey, everybody.
Oh, okay. I think to kick it off, um, let's the first topic. I want my first question to both of you is, you know, how big do you think the impact will be, and do you think it can meet the expectations of the community? And more importantly, what would be a realistic expectation for people to have? So, who wanna kick it off?
Bilal, you want to go first?
Yeah, sure thing. Sure. Thank you, Michael. Hey, everyone. So my name is Bilal. I'm in charge of marketing at Aventus DAO. And for those people who don't know Aventus, we are actually a power chain on Polkadot. And we actually enable enterprises and pretty much anyone to create app chains, substrate app chains. And then we help those businesses to kind of manage all the processes, all the strategy, even things like funding, very, very end to end. And is as in addition to the technology. So this change in DOT is really important. But I have a contrarian point of view. I'm not sure if Michael should have gone first here because I've actually been a Polkadot holder. I looked at my portfolio, and the biggest impact is the reason why this is so important is people care about price of the actual token. In addition, it's driven by the supply, the worry about the excess supply of DOT in the ecosystem, and then people worry about the demand as well. Where will the demand come in? And I have to confess myself, when I looked at my portfolio, I have a small bag of DOT. I purchased at $30 when I look back, and this was going back. I've had that bag for like several years, and I never looked at it. And I know the price right now has went to an all-time low, and it came up to about 1.5. So there's some strengthening there, which is good. Now, here's my contrarian point of view. Supply cap is really important, but it's still being minted. But what's 10 times more important is the demand. And this is where I think I know it's quite cute to have a supply of 21 million or 21 billion and plus have a halving every so often, which is a nod to Bitcoin. So this is kind of a good narrative, a good story. It's a nice kind of a wrapper around the token. But what I think is much more important is two things. Number one is is that DOT is now, I think, available as available for institutional buyers through ETFs, which is really cool. And the second most important thing is that on the retailer side, you can actually now deploy smart contracts on Polkadot, in addition to the power chains, which you could have done already. But now it means that DOT can be used as a real gas token. It has much more utility than it did, like a few months ago. That's much more important, because ultimately DOT was just being used as a governance token. Now it can be truly be used as a utility token. And then if you open up another utility to institutions who want to buy large amounts through an ETF, that's another utility. This is much more important. I think in terms of importance, like the demand is 10 times more important than the supply. But of course, if you have a mad, crazy tokenomics where you just like minting billions of tokens like crazy, that makes sense. So it definitely is a good thing to kind of put a harder cap. It's still not capped. It's not. I mean, it's still being minted, and also this 21 billion cap. I don't know how many years it is, but it's a long way in the future. But it's way more important to focus on the demand. So, which is what they're doing, which is a really good thing. This is why I think the sentiment has changed around DOT.
Yeah, I think Aventus and Mandala are both, working on offering more demand for DOT. Okay, so Michael, what's your take on this?
Yeah, I actually wanted Bilal to go first. I was offering to, because I actually also hold a very similar view to you. So outside of Mandala, I also have a YouTube channel, Republic Rupiah, which is our research and media hub. And we cover like every ecosystem, not just Polkadot. So I do like obviously know Polkadot quite intimately. Like I also been around for quite some time in DOT. I think I first bought DOT like pre-parachains going live. But I also see what's going on in a lot of the other ecosystems as well. I don't think that this supply change is going to do anything for the price. I don't think that the ETF will do anything for the price. I think that you're exactly right, Bilal. I think it's great. Like I think it's a good thing to do. But especially because of just the market and the sentiment right now, I think that it's not going to have a huge impact at all. I do think it's a good thing. I think it's great that it's happened, but I would get the community to maybe just temper expectations a little bit. I do think, Bilal, you're right, that use case driving to the actual like main chain itself is what actually is going to turn things around. And if you look at the price, like maybe if we go back 2 years ago, not to speculate too much on the price of things, but if we were to go back 2 years ago, DOT had just hit like $10, which is the first time that it actually got like a good spike. This was just before Decoded in Brussels. And you could see that there was like some energy like happening again in the ecosystem because Parachains launched, we went into a bear market for a couple of years and it was pretty rough, like going down to like $3 or whatever it was. And then we got back up to 10 and we came back to about 6. And that's when I was in Brussels for Decoded. And since then, the parachain model got changed. Down she's gone. And I don't think many people have realized that correlation because the main driver use case of DOT disappeared. And no one was locking up DOT in parachain auctions, slot auctions anymore. And then obviously Bilal's exactly right. It became a governance token and people were only just using it for governance. And now that's kind of not really a thing anymore either. So Bilal, yours 100% hit the nail on the head. I was about to think that we're going to have a bit of a debate here or something like that for a second, but I totally agree with you. I think the real main use case is what's going to actually drive the price forward much more than the supply change.
Yeah, I agree with you with you two guys. The control of the supply is will helps, but I think the community should correct your limitation because the inflation halving will have a limit impact on the second market. I have to point that part out because we all know that the community are expecting the direct impact to the price. So I think that as a retail investors, we should be be more be more realistic and should have the right expectations to the big stuff gonna happen. So I think the Polkadot hub already go live, and Mandala Chain and Aventus is working hard to exploring more use cases for the Polkadot ecosystem. I'm sure that the demanding will increasing dramatically as time went by. So another important question is about liquidity. Under the new model, DOT inflation will drop to around 3.1%. And in theory, capital usually flow to higher yields. So many people expect that less DOT will stay in staking and they will unstake, and more liquidity will move into DeFi. But the reality today looks a bit different. Across the industry, DeFi yields are much lower, and on-chain activity has slowed down. So even without looking at the data, I don't have to show the exact data. We can already feel it directly. So how do you guys see this situation? And do DeFi yields weaken the expectations that lower inflation will bring more liquidity into DeFi? So who wanna jump in first?
Michael, you want to go first?
Yeah, happy to. Yeah, I think you're right here, Kristen, as well. I do feel like that yields going down will probably mean that there is less DOT locked up. Now, this is a really interesting point though, because what's happening with most of all of the yield, I think most of it is probably being sold. I think people who do have like a lot. And so I think what will happen is that there probably may be a lot of like DOT that gets like unlocked and puts back into the market, and there may be some initial selling as a result. But I guess that's for time to tell whether or not that's better or worse than constant rewards constantly being sold. So it might just be like there's an unlock and a re-hypothecation of people's funds into applications or sold, but at least then it's not a repeated event. And so it might be short-term pain for like a long-term gain. I think that's probably what my bet would be.
Okay, interesting point. So Bilal, what's your take on this?
Right. So I think there's two things happening on a micro level. I think this is a positive thing for DOT in that staking yield at the moment for DOT is around 10% APY, which is pretty decent compared to other tokens. So I think this cap could potentially encourage more people to stake because they feel, okay, I'm a long-term holder of DOT. I'm getting 10% yield at the moment, and then I'm hopeful that I'm long on DOT for the next 5 to 10 years or whatever. That this is for some holders who are very long term. In the short term, though, the macro environment is much more pressing. So there's basically a movement away from high risk assets. All of crypto is high risk. Even Bitcoin is considered to be high risk. And everyone everywhere is just moving their money away from high risk to low risk. They're willing to accept lower yields, even of only a few % per year, if it means that they're not going to get their legs chopped off. They're not willing to take risks at the moment because there's just this uncertainty in the world. So for anyone holding anything nowadays is just kind of moving into lower risk assets. So this has an impact on stakers as well. So those stakers, again, there's a variety of different holders out there, and they all manage their risks differently, and they all have different portfolios. It could be that some of them are sticking back and thinking, we don't know where the world economy is going for the next 2, 3, 4, 5 years. Let's just away from this area and into this area. And I don't think DOT necessarily has done anything, has any impact here. It's the entire crypto market. Even Bitcoin, which is the gold standard, even Bitcoin as well, there's massive uncertainty. Nobody knows what's going to happen. And that for some people, that's enough for them to move into a sure thing, like, treasury bonds, treasury, and other kinds of like assets where it's like guaranteed you'll get like, 2-3% per year. They want guarantees. So that this is the wider impact. But I think it's definitely a good thing within the DOT ecosystem.
Okay. Yeah, the priority is keep their assets safety, and this is the most important stuff. So, talking about the demand, and I have a question for Bilal. Avatars focus on enterprise blockchain adoption, and Parity has also talked about the importance of enterprise use cases. But right now, many people in the industry believe most successful applications in blockchain are still trading and stablecoin payment. So beyond that, a lot of attention is also going to AI related tools and applications. So I'm curious about your view. Do you see large opportunities in enterprise blockchain that the market may be underestimating?
Yeah, so Ventus is agnostic about use case. And the entire point of Ventus is that we enable the client to create an app chain, basically their own private blockchain, and they can customize it according to what they need, whether it's time for finality, it could be the gas fee cost, it could be scalability, it could be privacy. There's lots of different kind of use cases that people have, and they might want to have a more permissioned blockchain, a more private one, or they might want to make it very public and very decentralized. In each case, Aventus has a solution. So that's the broader picture. The narrative which we're following, though, is the idea that lots of businesses don't really trust public blockchains or other blockchains. They would rather have their own infrastructure, which they can control. The reason is generally there's a movement towards tokenization of any asset. So lots of assets are coming on chain, and those issuers think very carefully that when we issue this asset, which exists in the real world, and we put it on chain, where is it actually going to be? What environment is, and how much control do we have? Can that network destroy us? Destroy our asset when we tokenize it? So they got worried about all this stuff. So it's all about risk management for them. And this is a mega trend when it comes to tokenization. But the question is, where do those assets end up? We've definitely seen a trend that big asset issuers prefer to create their own blockchains. So what we think is that, fine, Aventus is a relatively small player, but the very, very big asset issuers will have their own teams. They'll even hire 50 people and they'll build their own chain, as we've seen. There's lots of big enterprise institutional blockchains coming out. But what about like the medium-sized companies? So that's where our market is, where the medium-sized companies want to tokenize. For example, what if I run a mango farm and I want to tokenize? It's a really big farm, but it's not like we're not like a huge corporate, but we want to tokenize our farm and share allow people to invest in our farm via the token, and we share the profits of the farm with those users. Where do I go? What do I do? So Aventus basically is trying to offer those very successful medium-sized companies a very cheap and trustworthy solution for them to tokenize and put their assets on blockchain. And if they want to go down the DeFi route, they want to go down supply chain route, no matter what your use case is, we will support it. But the entire point of Aventus is that we want to offer every solution. So we have this new product coming called Aventus Cloud, which basically is extremely decentralized, meaning we as the kind of managers of that network are almost out of the picture. And so when a business comes in, they will think, can I trust Aventus? And our answer is you don't need to, because the Aventus Cloud is massively decentralized. We have very little control over it. So when you deploy your app chain on Aventus Cloud, you are the one who decides how that thing operates. So we're out of the picture. So this is a very different model to how I know the Mandala chain has moved as over at on Polkadot over to the ETH ecosystem, and it's a really interesting story. I'll let Michael tell it. But yeah, this is but I would say even Mandala is maybe not a use case for us, so as they're running their own chain. We're more towards the businesses who want to put their assets on chain, and they just need a solution provider who can offer everything. So we're able to do that and be out of the picture, and also be the cheapest solution as well. I think being cheap is very important. We are probably going to be the lowest cost roll up as a service, as it were, in the industry. I mean, literally at 10 times cheaper than any other solution. So again, the business, when they come in, think, okay, I have a very safe, secure, low cost solution within my budget that no one else can compare to. That's what the vision of Aventus is right now.
Okay, Aventus Cloud is decentralized. How can you convince the users that you are decentralized and transparent?
The biggest kind of criticism of blockchain is that validators are often centralized. So you have the main blockchain, which is publishing blocks. Then you have validators who are checking everything and checking transactions. And then people worry that who's controlling the validators? Like, where are they? Who are they? And usually these validators are usually institutions and companies. And so what we're doing is we're breaking that monopoly of, having to be a professional to run a node and to run a validator, which is a very complex, expensive task at the moment for almost every single blockchain. And we just break it up into like a very simple piece of software, which someone runs on their laptop. And then now you are a validator. But we have like tens of thousands of them. So we open up the retail validators for any Aventus app chain. So it's not like one institution or one company being the validator. So yes, they might run 100 servers so technically it looks decentralized, but actually who's controlling the server is actually one company or one person, and he and she can just press one button and turn off the entire validator set for the entire blockchain. This is the reality of a lot of roll-ups that exist at the moment. And also even blockchains, like even L1s. We've seen lots of examples recently in the past 1 or 2 years where literally the network turns off the blockchain because they don't like something or something bad happened. We can't do that actually, because we just have massively decentralized it into lots of small little pieces around the world.
Okay, there's a mechanism to make sure it is, trustworthy. So tell us more about the Aventus DAO. So why you choose to, firmly, are running by DAO, and because DAO always work for some specific purpose, and in some use cases it doesn't work at all, and it may just slow down the efficiency or something. So why do you think the DAO is the best way to run Aventus?
Yeah, the entire ethos, the entire purpose of the DAO, it's a nonprofit, by the way. The only thing that drives us is to support the Aventus ecosystem. There's literally in the constitution, there's no other kind of like clause. The only purpose of the DAO, the only reason any of us are working for the DAO is to support the ecosystem and to see it thrive. But the bigger story is that as a DAO, we want to get out of the way, and we realize that we need to make Aventus competitive in the marketplace. So our purpose actually is to automate almost everything, and just for us to get out of the way. So actually, what we'll see in the next few months and coming years is a very, very lean and streamlined Aventus, where people can essentially self-serve. So if Michael wants to come to Aventus and he wants to start, launch his own blockchain, within 30 minutes he'll be able to. So we don't need to speak to anyone at Aventus DAO to get anything done anymore. In the future, everything will be automated. So the DAO is kind of like a promise to the community that there's no entity that's here to extract value out of the ecosystem. Like our entire purpose is to create value. And if we're not creating value, we're not doing our job. So that's the entire point. Now, of course, there are risks. Everything that we do, some things may work out, some things may not work out. So as a DAO, we are very conscious of that. And there is lots of debate in the industry about the efficiency of DAOs. And there's not one kind of DAO either. Some are very decentralized, some are very centralized, even though, and almost like a DAO in name only. So there's definitely a balance about how DAOs are structured. And we're different too. I would say Aventus DAO is very unique in the way we operate.
Okay, thank you. It's very informative insights. And Aventus working so hard on the enterprise adoption and onboard them on chain. And I think Mandala is also working on the Indonesia market use cases. So first of all, and Mandala recently completed your TGE, and first of all, congratulations.
Thank you. Yeah, a lot of stressful nights, that's for sure. But yeah, it's good to have that one past us.
Okay. I think there's my first question is kind of a concern from the community, because Mandala chain also announced earlier that it would leave the Polkadot ecosystem, which created some confusion in the community. So could you help explain why was the decision made, and what does the relationship between Mandala and Polkadot look like today?
So just to clarify that one a little bit, Kristen, those words, "we're leaving the Polkadot ecosystem," has never been said by anyone inside Mandala. So just to correct that, we're not leaving the Polkadot ecosystem. I think I've got a Polkadot hat on. Yeah. Like we have not left Polkadot. So I gave a talk at Sub-Zero in Argentina about how we were going to shift some of the use cases inside Mandala to not be on our parachain, and we were going to put them on Polkadot Hub. And so we could see that the movement of the Polkadot ecosystem was away from parachains, effectively. That a lot of Polkadot itself was kind of like, instead of being this big octopus of tentacles of parachains, it was going to shrink down into being the core tech was being more supported on the main Polkadot Hub. And so we thought, well, there's no point us fighting against this. We should go with it. And so we want to be supportive of this. And so Mandala is more than just the chain. Mandala is a series of applications. And the Mandala project, we could probably take the word chain out of our name. It's just Mandala. We're I guess, a DAO as well, but we're an organization of entities that are building applications for government, retail, and enterprise use cases. And so we've got a whole series of different things, from government applications to enterprise with banks, to just normal retail DeFi applications. We came to the conclusion that the parachain was going to probably be less of a feature inside the Polkadot ecosystem, and Hub was going to be the main priority. And so we said, well, let's move some of our apps from living on our parachain to Polkadot Hub. And that's what my whole talk was about at Sub-Zero in Argentina. And then obviously later in December, we saw that there was like a lot of things happening, and like a lot of turbulence inside the ecosystem. Then we sort of talked about the idea, well, do we even need a parachain at all? And we probably realized that we probably didn't. And so we thought, well, maybe we just don't launch the parachain itself. We'll just launch the series of applications. But the one thing that is unique about Mandala is that we do have a whole bunch of different governments who are also running their own L3s on top of Mandala. And so we obviously realized we also do need a chain. We do need a place to secure them. And so when that conversation was had with our main business partners, for years, they've all been asking us, why are we a parachain? Why are we not in Ethereum? Because the tooling was so much more prevalent, and it's easier for them to get investment, and it's easier for them to get signed off by different government bodies because more people had heard of Ethereum. And so it made a lot more sense for us for that element of our business to be the L2 to support the L3s, that would be an Ethereum-based at layer 2. So the Mandala chain is an Ethereum-based layer 2 to support some of these government chains as part of our ecosystem. But the actual main part of us is also like just develop these actual applications which will go on main L1s or L0s in the case of Polkadot. So we are a multi-chain ecosystem. We're app builders. We're building solutions and use cases for governments, for retail, and for enterprise use case. Some of these use cases will be built directly on Polkadot, and that will still happen. Some of it will be on our Ethereum layer 2, the Mandala chain layer 2. Some of them will be on other chains. Some of them might be on Aventus. And so we're open to business partners wherever it makes sense. We talk to Energy Web and we talk to Origin Trail. Like we obviously know Aventus really well as well. So like we want to do business with good people, and Polkadot is still very much a part of that. But yes, the Mandala chain itself for that use case will be an Ethereum layer 2. But I'll just also add, we actually have the Mandala Super app coming out. It'll be a mobile app that you can download from the App Store and the Play Store, and that'll have all of the Mandala use cases in that application, including being a full-blown Polkadot wallet for not just Polkadot, but all the substrate-based parachains. So, so that's also coming. So yeah, not leaving Polkadot. We just not a parachain anymore.
Yeah, great to hear. I can, because we stay so close to the community, we can feel that community loves Mandala chain a lot. So when there's some confusion that they thought you guys are leaving, they feel very, very sad. So it's happy to know that you are not leaving, you are still staying, and Polkadot is still part of, it is still a very good, very important part of Mandala. So happy to know.
You'll be able to get the Mandala token, KPG, like soon on Polkadot as well, once more sort of DEXs pop up. We actually will have our native DeFi hub, which will assist with that. And obviously when the Mandala app comes out probably in the next month, all your Polkadot assets, everything will be able to integrate with the full Mandala ecosystem through the Mandala app.
Yeah, great to know. Another question about Mandala is, the regional growth, especially for the Indonesia market. I attended the Hong Kong consensus in February and spoke with many people in the industry. Some OG feel that Web3 growth may be slowing down, and while others believe that many regions are only just starting. So how do you see Indonesia today, and what does the growth potential look like, and which types of application are gaining the most attraction there?
Yeah, so retail trading has always been a big part of Indonesia. There's like retail crypto trading has always been huge. Like meme coin speculations, unfortunately, has always been really big in Indonesia. But just general trading in general is big. It's a very mobile-based society. It's very popular. But because our approach is a little bit different, we've also focused mostly on blockchain, not crypto. That's been our sell when dealing with governments and enterprises in Indonesia. We've also now been able to take this to a few other different places as well. But the main focus has been blockchain, not crypto. And so as part of that, we are trying to abstract the blockchain side of things away from the front-facing side of things. And so a lot of people just think that they're building with a more secure way of producing an application, or like for example, we're going to be very, very deeply integrated into the AI scene in Southeast Asia. Mandala will have some really significant AI implementations coming in the next probably 2 quarters, I would say, in Q2 and Q3. So like the whole ecosystem is about to transform to be really AI driven. And so what we've done is we've tried to like remove a lot of the crypto side of things from a lot of the applications that we've been building. It's really interesting to see how that's going to play out, but use case is not going to drop off. The tech is part of the Indonesian roadmap, and a lot of the partner countries that we're dealing with as well, it's actually been instituted by the government that this is part of their long-term roadmap.
Okay. So for the AI part, I maybe missed the some information. So how about the AI in Indonesia?
Yeah, so a lot of like compute obviously is the big part of AI. And so we've got some big partners who obviously have access to a lot of energy and a lot of compute power. And so we're starting to try and do like every country, like America always wants to do things denominated in the USD. We're making KPG, like our native token, be able to be transferable both in compute but also in like AI tokens. So obviously we know when you're using ChatGPT, you're burning amount of tokens and you're getting an input back out. Well, we're going to try and denominate as much of that with KPG, our token, as possible. And so we've got some really great business partners who have access to a lot of compute, and also energy will be a big part of what we do. And so, yes, I think sort of AI compute power will be denominated in KPG in a lot of the applications which we have moving forward.
Yeah. AI is demanding the market in China as well.
It seems like it's where it's going, and you can see like a lot of like OG crypto people have pivoted to AI a lot. And I do think that AI, as much as we might not all love it for us native crypto people, but I think that AI will be the mainstream use case for crypto and blockchain. I think that they're going to go hand in hand, and it'll probably be the main use case. And AI will be this big encompassing thing, and blockchain will be like some solid infrastructure behind the AI revolution.
Yeah, I saw the post that you guys post on your X that asking for the the scenarios that blockchain plus AI could be, and I think there's more to explore. Okay, thanks for sharing, and we already touched the inflation, the DeFi, the enterprise, the enterprise use cases and the Indonesia market. I think at the end of a conversation, let's share more exciting news in the future to our audience. We're already approaching the end of the first quarter of 2026. Could you guys share your main priorities for the coming months, or is there anything that the community could look forward to? And also, very important part is, very possibly 2026 will bring in another bear market. So do you guys, already prepared for that? Who wanna start first?
Maybe I'll go first about this. I was thinking about this question for a long time, actually. It's probably the most important thing right now on everyone's mind. So I'd say that everyone at Aventus, I would say, is hypersensitive to the situation that we're in right now, both the macro environment and also the micro environment. And we think about every single narrative and every trend and where everyone is going right now. So the only answer we can say for Aventus is that we have to be very, very, very agile. We have to change rapidly and very significantly to be more responsive to the market and where the market is going. I think any blockchain or Web3 protocol or company or DAO or anything that is slow right now will get eaten up in the bear market. And I personally came into crypto and Web3 and blockchain at the end of the last bull run. So it was like 4 years ago. And within 3 months, the bear market started. And I remember the price of ETH went down to like less than $1,000. I remember having dinner and it went below $1,000 at one point. And it was like complete desperation. Everyone you spoke to at that time was, crying and desperate and didn't know what was going to happen. And the only thing that you can do at that point is to survive until the market recovers. And the market will recover. This is the very important thing, that there are cycles There are
Mhm.
always ups and downs in every single market. And so we know that every builder, everyone in the industry knows that, things are bad. However, you have to go back to reality and actually make something that is actually use case based, not random. So I
Mhm.
think those companies, those protocols, which are kind of living in a bubble and not being responsive, not listening to the community, not building in an open way, in a transparent way, in a way that they can actually get live feedback of what they're building, they will die in the next 6 months, 1 year, 2 years. So we at Aventus definitely we know that we're mostly infrastructure focused. We're very aware of what's happening in the infrastructure, not only within Polkadot, but also within all the other ecosystems. And I think all of us, I can say I'm quite new, and there's actually quite a few new team members at Aventus who come from other areas of industry and other ecosystems. We know what's happening in other places, and we know that Aventus needs to change as well. So what you see this year is a very agile Aventus that is very, very responsive to both the users in our community, but also the developers in our community and the businesses and the enterprises in our community as well. So it will be something we'll only build what is needed and is wanted by essentially the people who are using Aventus. I think in the past, if we want to look at our previous performance, there's been some really good periods for Aventus, but the answer to staying relevant is always to be agile and fast and build quickly, and so that's why we're moving towards automation. That's why we're moving towards decentralization, so that we can essentially kind of be out of the way and allow the innovation to happen on the network. So this is the direction that Aventus is going. So yeah, I would say generally tough times are occurring right now and probably will occur for the foreseeable future. However, we are a very, very I would say smart team, and we're very responsive as well and very aware of what's happening. So what's going to come in the next few months is only what is needed by the industry. So fingers crossed, our strategy, our plans actually work out and lead to the results which we're expecting. But we're very, very aware that there's the risk of working in this industry has gone up. This is the big thing. This is the difference of bear and bull, is everything is more risky. Everything is more on edge, and you have less of everything, less resources as well. So this is why your work has to be really, really on point, really, really on point. So this is where Aventus is. So yeah.
Mhm. Yeah, I agree with you. I think bear market is hard for everyone, not only for builders, for retail investors, for VCs, for the traders. All of them are are facing a very tough time. And as you said, stick to the strategy and hope it works out. I think the teams that can survive the bear market, they can survive long. They already passed the serious test. Okay, Michael, what's your take on this?
Yeah, this is my third bear market now.
Third?
Yep, it's my third. And so for me, obviously we all prefer bull markets, but there's an element of it that like I de-stress a little bit, because it's not like I'm so on edge where it's just like, okay, prices. Like it's quiet. Like a lot of the noise disappears. If you just forget about the money side of things and you're not trying to make money, this is the build market, as they say. And so we were very cognizant of the timeline that we were in. Like I said, I've been here 3 times now. And so we were prepared for this. Like we have multiple organizations that are responsible for building the Mandala project, whether it's a foundation, an academy, and like 3 other different companies that are all involved in like the construction of this project. And so we're very like, and most of these organizations have other revenue streams as well outside of just like trying to raise funds or sell tokens. So we don't need to be doing that. So we're very prepared. Like we're loving the ability to just build, and probably a little bit of less hype around at the moment. But this is where, like, and this is my experience. Now, I'll admit the first 2 markets I did not get it right, but I'll admit this is the time for those people who keep locked in and keep their attention focused will be the ones that succeed the next time things turn bullish. This is your time to position yourself. This is your time to like get involved in the ecosystem. This is your time to find your horses that you want to ride. Yeah, this is where the success is built during the bear market.
Okay. Yeah. Keep it financially health is very important. Have a multiple ways to work on, which is also very good strategy for the bear market. And it's your third bear market. I think you know you know how to what to focus on the bear market, and it is true. As long as we keep our financial health, and there's no bear or bull market, we just focus on what we have to do. So there are some audience that engaging with us. Let me check if there's some important questions. Okay, there's a user asking if he can put some questions. Okay, if you guys have questions, the audience have questions to our guests, you can leave your questions on our comment section. But I think we don't have so much time for today. If you can leave the question right now. Okay, but no worries. You can just leave your questions on the comment, and we can just reply you on the Twitter, or you can DM each of our guests and for the important questions. I think we will respond to your questions promptly. Okay, thank you. I think it's there's a lot of information in our conversation, and the audience need time to sink in. And a Polkadot, we will select, we'll have some highlight clip for the second distribution for the audience to sink in the important insights, and also we will summarize our conversation into an article to publish in our WeChat account next week. So if the audience cannot follow our conversation, you can follow Polkadot for more details in the coming week. So I think that's all for today. Thank you. Thank you, Michael, and thank you, Bihal, for sharing, and thank you all the audience for being here today. And let's keep updated. We will keep an eye on you guys, and we'll very happy that could invite you guys to join our conversation again next time. That's all for today. Have a great day.
Thanks, everybody.
Thank you.
Bye-bye.